We woke up to the headlines of all-out war in the Middle East and a warning from Houthi rebels in Yemen that they were going to blockade Saudi Arabia. I thought we'd have a massive jump in oil prices. Brent WTI up less than 1% each. Is the market paying attention?
The market is paying attention. The market is exhausted. I mean, aren't we all a little bit exhausted by what's happening? I think that we're starting to see, I think some people were long into the sell-off. And so as oil prices have started to come up, they've wanted to take off their positions. I haven't traded the market in a few months, so I can't be confident that that's what's happened. But I think that that was probably part of it. I think another part of it is there is still this, there were some headlines that Iran and the U.S. had reached some sort of ceasefire for 6 days. I know that's a very brief time period, but there were some rumors about that as well starting to creep into the market. And so sometimes when there's smoke, there's fire. And so we may see something that establishes some sort of ceasefire in the coming days between Iran and the U.S. or even the Houthis stand down.
Well, even if you were to get some kind of interim agreement, the last ceasefire still had plenty of fire in it, Michelle. And I wonder if you see that even if there is an interim truce, that is going to be enough to give shippers and crews enough confidence to try to transit through the Strait of Hormuz or the Red Sea, for that matter.
I think we're getting to the point now where the Strait of Hormuz and the Red Sea, for that matter, need to have a new framework, right? The framework of the freedom of the seas. That framework is broken, and it's going to be really hard to put that back into place. You're going to need to have a new framework that gives commercial vessels confidence to be able to pass through the either strait. And I think that's going to look like something much more structured than just military deterrence sitting in the strait trying to move ships through there. You need something that now gives the market some confidence, and that's going to take a while to form.
Does that structure include a toll booth, Michelle?
I think it does include a toll booth. I think it includes a framework that looks like a security framework. And of course, the fee is not going to be called a toll. It'll be called something like maritime security or something. It'll be rebranded into something that is a little more digestible. But I think certainly something needs to happen where these countries come together, whether it's a coalition of the Arab nations or whether it's an international framework that looks similar to the IMO, but isn't necessarily the IMO. But something needs to come about that will give some structure and a framework that will be a neutral party to allow commercial vessels to feel comfortable passing through the strait. At this point, the confidence has been eroded either in the marketplace as well as in shippers.
Well, can that come together more quickly than these exporters can find workarounds, Michelle?
I think it can come together faster than the exporters can find workaround. I don't think it can come quicker, faster than the market starts to feel the pinch or starts to become constrained. And I think I don't know if we talked about this on the last time, but the real constraint is refined products, where we're not seeing refined products come out of the Middle East, but we also have Russian refined products that are constrained. So while crude oil is certainly congested in some places, it has had some real Herculean responses with Chinese imports dropping off, Saudi and the UAE being able to reroute some of their crudes in the SPR. So the crude oil prices have been able to see some sort of softness just from all three of those responses, but refined products continue to remain significantly tighter than crude.
And they have our attention as well. We've got gasoline back above $4 on average and diesel at $5.10. Michelle, with all of that said, you know, we're in the throes of hurricane season here, and it wouldn't take a lot to change the narrative around crude oil supplies or refining capacity. And another headline that we woke up to today, the SPR has a 43-day supply. Is that accurate based on your observations? And is that something investors should be worried about? It's obviously there for a crisis, but we use it in very different ways now.
I don't know what 43 days of supply means exactly versus what. Like, does that mean 43 days of supply based on net imports, 43 days supply of global shortages? Well, I don't necessarily know what the 43-day supply means. What I do know is we have drawn down 100 million barrels of the U.S. SPR. That remains that there's 70 million barrels left remaining in the commitment from the U.S. into the IEA SPR release that came out with the 400 million barrels. So we still have, and if we're releasing 1 million barrels a day, that's 70 days of SPR that can still come into the marketplace. I don't know if that 43 days is after, and how many is that a release of 1 million barrels a day or a release of, I don't know. There needs to be significantly more detail around 43 days. It sounds dramatic, right, but it's probably the SPR has lots of problems, right? Structurally, it has lots of problems. You can't draw it down to zero. But I think that the U.S. will meet their commitment of 172 million barrels. And so we have 70 million barrels left that can be released.
Well, so as we consider the global energy picture, we just saw headlines at the top of the hour, Michelle, that the U.S. is getting ready to impose a 50% tariff on Canadian products in 30 days, though there are exceptions, including for energy imports. How crucial is that, given the precarious energy situation the U.S. and the rest of the world find itself in?
Well, it's really concerning, Kailey. One of the reasons that it's concerning to me as an American is that the U.S. is energy independent because of Canada, right? Canada is basically held hostage by the United States. They only really have one outlet, which means that the Canadians need to start building infrastructure away from the United States. So antagonizing Canada, who has been our largest supplier and has really been the reason why the U.S. has been able to have cheap energy prices for decades, is because of Canada. And if Canada decides that they want to reroute their oil to Asia or to Europe, if they want to build a pipeline across to the east, then you're really running into the fact that Canada is going to have a much more diversified energy economy than they currently have now, which really they have a small outlet to the West Coast that is maybe, let's call it 1 million barrels a day and be generous, but most of their oil still comes to the United States. In addition to that, we also receive our border is integrated with electricity, natural gas, oil, refined products, and they have the option to perhaps use that as a weapon if they chose to.